Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, August 8th. Well, today we got economic data in terms of labor market news. Initial jobless claims came lower than expected, and continuous jobless claims came a little bit higher than expected. But I think everyone was watching these initial jobless claims, and this data shows you a little bit of relief. Relief because the labor market is strong enough not to fall into recession, and that's what Wall Street, the markets, were waiting for. Real quick, this is the 15-minute chart, and as you can see, yesterday we broke this support into a big sell-off day, and I was really watching this order block that came into late afternoon pivot into a big sell-off yesterday. In order for you to understand how technical yesterday's sell-off was, it was to the tick almost on the 15% retracement from all-time highs. I still watch this 15%, the 12%, and the 10% that is above. So yesterday we closed at the lows right here at 15%, and honestly I think it was a little bit beyond expectations. Yesterday's sell-off was too much in my opinion. So today I was looking at zone on the 30-minute chart, this order block right here. This was the candle that was going to tell me, are we going to play longs or not? So basically this is the order block on the 30-minute chart, and if we go to the 15-minute chart, we got as it's usual during these days to have an overnight quite extended. So we played that, and we saw how again the market opened at 3 in London, and we started to just coil and coil and coil and coil. And look at this breakout. It was coiling, it was setting up into a big move in initial jobless claims. It could go either way, don't get me wrong. I don't predict the market, I react to the market. And what I was watching then was the huge rip to the outside, taking this afternoon pivot that was the order block on the 30-minute chart. So this big candle and then the open was telling me, just go long. And that's what I did. I was exactly watching the pre-market high level. So this is the pivot in here. Pivot extended, fair value gap on the 1 minute, 50% retracement of that, and also the order block. This is a huge confluence of 3 levels of interest, and I was really willing to accept a pullback directly there. So if it touches the pivot line, I will just going to take that candle. So the risk is easy. It was first started here, then here, and then here. I didn't put it here because that was pretty quick. So I was long here at 18,106, pretty psychological level, 43 points of risk. Basically the entry, the low of that candle, and if I get stopped out, I can just take another opportunity, or basically just the setup is not there and I got stopped out for a big loss. But I think it's worth noting that these kind of setups, I mean, 43 points of risk is way above my risk, is way beyond my risk. My risk usually is 20 to 25 at most points. That's $500. This is $800. And but the setup was perfect. If these candles were like 5 points, I would take the same setup. So inverse fair value gap into a push. I mean, this was a plus setup for me. The target, I told you this today. I'm being conservative. See money, take money. See profits, take profits. Just at that point, pre-market high. And that was pretty awesome pullback with a consolidation into this inverse and then the rip higher. That was 144 points. 144 points, almost 3,000 bucks. 3.3 risk reward ratio. And the Nasdaq just went above and above and above and above and pushing and pushing. Today is quite bullish. So Apple is 1%, Nvidia it's 5.50%, the same as semiconductors sectors 5.58%, AMD 5%, AVGO 6%, ARM 9%. I mean, semis are pretty hot. So basically where we are right now in terms of the Nasdaq, let's zoom out as always to the 1 hour. And I've been watching this range for days since we break down here, and yesterday we rejected the same kind of bias that I changed yesterday. Okay, this looks like a rejection, but we bounce off this zone right here, this fair value gap that we did the other day. It's still holding here. Note that I have a fib retracement and we basically rejected that here at the open. So we are pretty bullish. Let's clean a little bit the inverse and the setup and everything to just the order block, the pivot, the liquidity taken. What is left? Look at this. This is a magnet. This zone right here that I don't think we took. Let me just go to the 1 minute. Oh my God. Look at these relative equal highs here that we just didn't take. This looks like, I mean, this is not gonna last, let me tell you. But maybe we are taking first this. But this is just if you continue trading, I think we are going to take these lows and then push higher to 18,600 to take these relative equal highs, and then yesterday's high. Beyond that, I'm still waiting for this zone. Look at this void in between the 12% and the 10%. There's a huge void of volume. So the same way that we drop down with a lot of velocity, I think we are going to fly through these levels. Perhaps not today, but tomorrow I will be watching for sure this thing. What I will be watching? Exactly this. We have the confluence of, this is not a 15-minute, this is, let me just adjust this. This is a 1 hour. And also, don't forget this blue dot line that is last week low. So basically, this order block goes out, this goes out. I have this. Yeah, pretty good. So we have this 1 hour that got tapped, pretty bullish, coiling, and then push higher. I think we are going to 19,000 tomorrow. That would be insane, but that's my target. Honestly, price action is pretty bullish. We are going through all this void in which we are going to skyrocket. I'm pretty bullish going into tomorrow. But I always say the same. Be really careful because manipulation is everywhere. These market makers are evil and this sell side liquidity might get taken today and then push that either today or tomorrow. So this is my target for today. If we took that today, tomorrow we are going to enter into this volume void in between the 12 and the 10. And I think high 18,800s would be a pretty good target. There's a relative equal highs here. I mean, tomorrow looks pretty juicy. Dollar, excuse me, dollar is bouncing a bit. We just reclaim the gap. We gap down today on the dollar, by the way. So we took that gap And we are now rejecting the inverse, so dollar looks bearish, which is congruent with the bullish direction of equities. Yields are pushing higher now that economy is showing strength. Yields are adjusting again. And look at this. This is December. Let me just adjust. This was December. Is this December? Let me just real quick. This is December 2024 interest rate futures. This is 4.46. That's more than 0.5% lower than the current rates. It's almost 1%. This is going higher because we were pricing in aggressive interest rate cuts down here, but we are correcting that. And what we are now also correcting is the inverted yield curve. So everything it's going super fast. This catalyst, the way market is moving, I mean, the VIX is still quite high at 24. We spiked a lot, but let me tell you, be patient. Things are getting normal again, and we can see how the price action is adjusting to all these freak out, but we are still bearish. We are doing lower highs and lower lows. Now that we found some kind of short-term bottom, let's see if that holds. And that 1 hour is going to be key. This liquidity is going to be key. And this is the frame that I will be watching tomorrow. Basically this. Let me just remove this. And I think this 1 hour is key to hold. I would like today to take that, reclaim, and push higher. If we take this buy side liquidity, tomorrow is bullish. If we don't, tomorrow that would be my target through 18,725. And I think that's all from my side. Today looks pretty bullish, tomorrow looks the same, but let's be patient. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. The trading day is not over yet. You have my levels, you have my bias, but I try to teach you risk management, patience, and discipline because those are key for your success. I learned those with bad experiences. Don't do that. Just try to follow your process, follow your intuition, and you will be successful in this journey. So stay safe, everyone, and see you tomorrow.